Any mining companies out there, please mine more nickel. Okay. Wherever you are in the world, please mine more nickel, and don't wait for nickel to go back to some high point.
Why has Elon Musk stopped talking about nickel and only talking about lithium? Welcome back to Rockstock Channel. It is Thursday, July 27th, and for the first time in a little while, we're going to talk about something other than lithium. Nickel is in focus today. If we go back a few years, Elon Musk said mine more nickel, and a bunch of nickel development stories rallied aggressively ahead of Battery Day in September 2020.
Wherever you are in the world, please mine more nickel. Go for efficient, as environmentally friendly nickel mining at high volume. If Tesla will give you a giant contract for a long period of time, if you mine nickel efficiently and in an environmentally sensitive way.
Before we get into the video, we'd like to announce that we have our very first sponsor, Zelandez. Zelandez offers brine field services and has the technology to speed up understanding of your lithium resources. We'll tell you more about them later, but until then, check out Zelandez.com. We're also excited to share that we are now sponsored as well by Lithium Royalty Corp. Stay tuned for later in the video to hear more about them. We continue to follow the story, or follow the nickel market, and we saw a great note from our friends at Benchmark Minerals that caught our eye about the rise of Indonesia. And there's a lot of debate and discussion about Indonesia and their growth, and if it's sustainable or is it going to be IRA compliant. These are some questions we'll get into with the Benchmark writers of that note. We have Harry Fisher in Brisbane and Bruna Grossel in London, who wrote this note, which we'd encourage you to read. And there are some slides from that, as well as some slides from a recent Benchmark events on nickel that we'll dive in here. Harry, if you could just start with an overview. There's always these charts about what is the demand, how much is demand going to grow of nickel over the next decade or so, how many new mines are needed. There's class 1 nickel, class 2, sulfide, laterite. There's always a debate, either or. We think it's obviously both. What's going on in the nickel market? The nickel price has not been doing so well. A lot of nickel developers are not doing so well. Why has Elon Musk stopped talking about nickel and only talking about lithium? So just start with just a general overview and a brief introduction of yourself and what you do specifically, for Benchmark, and we'll start with that.
Thanks, Howard, for the introduction. As you said, I'm based in Brisbane. I primarily work within Benchmark's consultancy division. I work on a variety of kind of strategic pieces through the value chain, but kind of mostly focus on nickel and cobalt. So the nickel market is still very much dependent on stainless steel demand. It's still not a battery dominant market as we see for cobalt and lithium, for example. The market today is kind of in the region of about 3.2 million tons. 2/3 of that is still stainless steel demand. Looking ahead, by kind of 2030, the market will exceed 5 million tons. So there's still quite a substantial amount of growth over the next kind of 5 to 10 years. And that kind of trend will continue. And the share of battery demand as a kind of proportion of the overall market will increase as well. So stainless will drop to about 50% as battery demand takes a greater share. And that's really why we're interested in nickel at Benchmark, of course, and why the nickel market gets a lot of coverage in this space. Nickel's a critical part of those battery chemistries, and we'll probably get onto that later on. But it's got a very strong growth story, perhaps not as strong, say, as lithium, but still we're seeing kind of doubling or tripling of demand over the long term, and very much still going to be a need for new project development, even with the large volumes coming out of Indonesia.
Hi, everyone. Thanks, Howard, for an introduction. I'm Bruna. I'm based in London, and I work for the sustainability team within Benchmark. I myself am more focused on the life cycle assessments, so understanding those environmental impacts of processing minerals such as nickel, cobalt, lithium, and graphites. We cover a range of these materials within our ESG reports, and we also do bespoke work on LCAs. Very recently, we had an amazing opportunity to go visit some sites and see in person how those processing technologies work, the challenges that those companies face, and to discuss a bit of them on how are the levels of ESG considerations within their activities. We took some pictures along the way of some of the impacts that we were able to see firsthand. It's going to be a pleasure to talk about the visit and what we have been doing here in Benchmark.
Okay, great. We would encourage everybody to read that article. Not everything that Benchmark puts out is for free. Actually, very little is put out for free. But this article is for free. I read it, and that's what prompted us to have this interview. So, all right, we'll talk a little bit about that a little bit later, Bruna. But Harry, what's going on in the nickel market? Like I said, commodity equities follow commodity prices, and the nickel price has been weak. Commodity equities have largely been weak, but you see Andrew Forrest's Wyloo Metals has made another acquisition of Mincor from March. It's about to close. That follows their acquisition of Noront last year, which was a bidding war with, I think, BHP. So one of the smartest mining investors in the world is betting on, Western Australian sulfide deposit in Mincor, and in Canada, with Noront. So Canada and Australia obviously have a role in the nickel market, but you're seeing a ton of Chinese investment in Indonesia, and you're seeing, what made headlines. You had Ford and CATL are doing a deal with Wyloo Cobalt, I don't know, $4 billion or something. Ford, I don't know how much they're investing in that. That's getting some political heat in America, I think. And on the other hand, you have Elon Musk and Tesla, has made a deal with Talon Metals, which is sulfide deposits, the only one really in the U.S. And the Department of Energy, has granted, some money to Talon. So if you could just help analyze for us what's happening, because this is Rockstock Channel. We're focused on how to make money with, development and producing equities. It's not so easy to invest in Indonesian, plays for nickel, but you're going to show us, how much growth there has been in the Indonesian nickel supply. Yeah, there's a lot in that lead in. If you could just address all of those considerations, please.
Yeah, sure. So just to kind of set the scene, really kind of where we're at in terms of price environment. Today, the LME nickel price is kind of sitting around the $21,000 per ton mark, which given market conditions is fairly good. That's a fairly strong nickel price. I guess the caveat to that is the LME has seen quite a lot of turbulence in the last 12, 15, 16 months since the short squeeze last April. And that's really rocked confidence in using the LME as an exchange for nickel trading. And the liquidity on that exchange has dropped substantially since that short squeeze and not really recovered anywhere near the levels before that. So we're kind of in this environment where the LME price is strong, but maybe the level of liquidity is not really in line with that. And perhaps the LME price isn't entirely representative of where the overall market is at, because what we're seeing more broadly is the market is in surplus. We're seeing the market surplus growing through this year and maintaining a decent surplus of kind of 200,000 tons or so this year and next year. And that will then start to kind of steadily decline, but it is a relatively slow decline because there's just so much supply coming onto the market. So we don't see the market shifting back into a deficit until the late 2020, so kind of 2028 onwards. And that obviously has an impact on price. So the kind of the $21,000 per ton price we're kind of seeing drop over the short term. We've got prices kind of averaging kind of 19 or 20,000 in the short term, and then our kind of long term marginal kind of incentive price is around the $20,000 per ton mark. So we see a bit of weakness in pricing in the short to medium term, but I guess the long term picture for the nickel market is still strong because we're seeing that big wave of of demand, which does eventually outpace even all of this supply that's coming to the market.
Harry, if I can just jump in there, when you say supply, can you pass that down into class 1 and 2? Because obviously there's a distinction there in terms of, how much of that oversupply is for stainless, say, and how much is for EVs?
Yeah, it's a good question. For those who are kind of less familiar with this terminology, class 1 and class 2 has kind of been the traditional way in which the market's been divided. Class 1 is deliverable on the LME. Kind of class 2 is everything else, really. And so the LME nickel is kind of a variety of metal products. And then kind of now we're starting to see much larger volumes of NPI and ferronickel that are class 2, and that's kind of impacting the kind of the relative balance of those parts of the market. So we've seen a kind of a growing surplus for class 2 more recently, but class 1 still being kind of a bit tighter, but we're starting to see more class 1 supply coming onto the market this year and next year, and that will mean that the overall market surplus is probably a bit more balanced between those two parts of the market, and that's when we're going to start seeing some downward pressure on the price. I guess the thing to consider really for now and looking ahead is that kind of class 1 and class 2 distinction is probably less relevant than it has been in the past. There's a couple of reasons for that. One is on the demand side, is that stainless steel demand is kind of gradually becoming less relevant for the overall market as battery demand grows. So that kind of major driver historically of the nickel market is starting to kind of mature and become less relevant. And also there's a lot more class 2 units coming to the market and new routes that are enabling producers to move between class 1 and class 2. So that kind of quite clear distinction that we've seen previously is becoming a bit more blurred. And that means that perhaps the market dynamics that were quite separate before are overlapping. So it's a very complicated market. There's lots of new supply routes coming all the time. Even in the last kind of 12, 18 months, we're seeing new established supply routes. But it's enabling opportunities for different parts of the supply chain.
So just to quick summarize on that, as far as EV battery demand goes, you don't see nickel then as a pinch point for some time then?
No, the demand growth from EVs is obviously very strong as sales increase and from other battery applications, kind of as energy storage increases, for example. But there's plenty of nickel out there at the moment and in the coming years to support that market. And that's why we're seeing kind of an overall market surplus, at least until towards the end of the decade. The vast majority of that growth will come from Indonesia, and a lot of that is from MHP, which is, for those who don't know what MHP is, that's mixed hydroxide precipitate, which is not a new product, but certainly seeing a lot of growth from new high pressure acid leach capacity in Indonesia. MHP contains both nickel and cobalt, so it's kind of solving two problems at the same time when it comes to the battery supply chain. And we're now seeing MHP already as the key feedstock towards nickel sulfate that goes directly into those battery chemistries. And that share of MHP going into sulfate will continuously grow in the forecast period.
This is my relatively lower knowledge in the nickel market, but I remember I was at a benchmark event, the very first one, I think in California in like 2017, and a couple of people who were focused on low grade sulfide deposits in Canada were kind of educating me and saying that HPAL is dirty, it's never worked, it's super expensive, and here you are 6 years later basically saying that it's working. Yeah, and that's why there's less of this distinction between class 1 and class 2, and that's where there's a crazy chart I think you have here showing Indonesia's percentage of the overall nickel market growing from like 5% to 50%. Is that correct?
Yeah, that's right. Yeah, the total global supply in Indonesia is now half of the global market. I forget exactly the year. I think it was 2015, perhaps that it was 5%. Yeah, it's seen a monumental rise, really, over a very short period of time. yeah, already half of the market, and if you kind of look at the forward view, we're now tracking more than 70 nickel producing projects in Indonesia. In early 2021, that was kind of 2025. So that we've seen 50 new projects in the space of 2.5 years. And Indonesia could support 65% of nickel supply over in 10 years' time.
Okay, but the knock on this was that this is dirty nickel, right? Because they're like pumping waste into the oceans, and it's coal fired in Indonesia, and you know that this would never be sustainable for the Fords and the GMs and the Teslas of the world. So is that accurate, or are they cleaning up their act?
So just to kind of give some context on your previous point on H-Power, H-Power is not a new technology. It has had its issues in the past. We've seen projects go massively overrun, massively over budget. So there was a lot of skepticism when these projects started popping up in Indonesia a couple of years ago, and this has all really come since the export ban was introduced in Indonesia in 2020. So that's kind of the background, but what these Indonesian projects have managed to do is, with the support of quite a significant amount of Chinese investment and expertise, they've been able to get these projects up and running on time. Some are even ahead of schedule, very, very capital efficient, and they've been able to ramp up on time and even commit to fairly significant expansions early on in their ramp up period. Just in terms of kind of the environmental piece, I'll pass over to Bruna just to kind of give a bit of an introduction there, as she's the expert. But I think it's important to note that not every nickel producer in Indonesia is the same. There's a variety of different routes that get you to nickel in Indonesia. HPAL is one of them, producing MHP, and that's the primary route for battery supply chain, but I certainly wouldn't call it all dirty. There's different levels of ESG compliance across the country, different levels of emission profile, different areas that they're trying to address in terms of their overall ESG picture. But I certainly wouldn't say that the H-Power's technology is dirty, but there are aspects that need to be carefully managed. I'll pass over to Bruna just to give a bit more background.
Jumping in here from the editing room to tell you more about our very first sponsor, Zelandes. Zelandes provides services in subsurface data visualization, downhole geophysics, and other services for lithium brine operations. They just expanded into North America, and no matter where you sit in the brine industry, Zelandes can help you speed up and improve your projects. Go to zelandes.com for more. We'd like to introduce a great new sponsor for Rockstock Channel, Lithium Royalty Corp. Lithium Royalty Corp is at the center of a global energy transition and manages a globally diversified portfolio of lithium-focused royalties in electrification and decarbonization. With 32 royalties on 29 higher-grade, low-cost projects from exploration to production, Lithium Royalty Corp covers all the bases with well-managed risk, ESG considerations, and a scalable royalty structure. Lithium Royalty Corp is publicly traded on the Toronto Stock Exchange, ticker symbol LIRC. To find out more about Lithium Royalty Corp, visit lithiumroyaltycorp.com.
Thank you, Harry. Yeah, you're completely right. There is a lot that you need to take in consideration when analyzing such processes. So the two biggest processing technologies in Indonesia, it's HPAL and RTF, so rotary kiln electric furnace. Both are very carbon intensive at the moment, but RTF is the worst of them because of the low grade of nickel in its material. We talk about 3 to 15% of nickel in the final product. So you need a lot of processing to get to that low amount of nickel, and a lot of energy and coal. And the main challenge with those technologies is their reliance on fossil fuel. So the electricity in Indonesia rely a lot on the coal production, and that's what's driving the carbon intensity behind those processes. There is some engagement, though, to introduce more renewables to the country, which are more than welcome. But there are still a few technologies limitants that might not show such effect of renewables in place as well. So that's why I think Howard go in place and say that it's seen as dirty. It's because of that high carbon footprint that it's trying to be tackled by the companies by adding renewables and looking closely at their operations. And within LCAs, we look at a range of environmental impacts, as is worth mentioning also terrestrial acidification from emissions of sulfur dioxide, basically because of the use of sulfuric acid in the HPAL production. I don't want to get too technical there, but it's an emission that leads to damage to the terrestrial ecosystems. So it damages to the species there. And another thing that is important to mention on operations in Indonesia is the devastating impact that it can have on biodiversity. I think when we talk about the process, we think more on those direct emissions, but there is also impact of deforestation, impacts on the biodiversity of the local coral reefs, and it would be a mistake to not touch on those points. We know that there is a lot of companies doing a lot to engage on those issues and to either remediate or mitigate the impacts. This is important to say that, as Harry was saying, that there are different levels of compliance towards these topics. And we see companies that are striving to do their best to not impact such diverse ecosystems. But from an overall perspective, our sustainability team has seen that for example, the 47 companies operating in the area, only 11 of them publish ESG reports or corporate sustainability reports. And from those 11, only 4 publish indicators on biodiversity monitoring. So there is a lot to improve. I think we can say that there is different levels of compliance, but there is still, from those companies operating, there is a lot to do better.
So if I could just like parse this a little bit, again, Elon Musk said mine more nickel ahead of Battery Day, but you also said that Indonesia put in some export ban, I guess, forcing development downstream. That development downstream is happening in size by Chinese and resulting in a lot of nickel supply out of Indonesia, as you're showing. So Elon is not talking about nickel too much because supply has increased, but also maybe because he's shifted a little bit, to LFP. But there is also this question of like IRA compliance. So that the pictures you sent us, Bruno, which we're going to put up here of, and your description of, blue oceans, turning brown. I can't imagine that, the Ford CATL-YU deal is that picture. Is that correct? Like there's dirtier and less dirty. It's project by project. Is that fair?
Yeah, it all depends of how they procure those materials, right? They need a due diligence step in place to make sure that their material is not coming from such mines. This is not the overall what we see in the overall Indonesian operation. This is like particular spots that happen, usually illegal mines that are operating without the proper government approval, which would be closed down according to government regulations. It's an issue of improper drainage, and it's something that needs to be tackled. But companies can have a handle on it if they have a careful due diligence process.
Yeah, no, I think you're right, Bruna. It's not seen across the board. That's one example, but that doesn't mean it's less of an issue. I think some of it is to do with the rapid development in the country as well. I think some of the projects that we've seen have been kind of set up in a very logical manner and gone through a very rigorous planning process, where others have just kind of been added quickly into a very small area, which leads to some logistical and other issues. So it is, you're right, Howard, it's very much project by project. And I think that's the important thing to consider for anyone looking at this value chain.
Okay. And then let's talk a little bit about like IRA compliance and the like, because the IRA is written for geopolitical, not tied to China, considerations, or not just reliant on one country for so much. I mean, 50% market share for one country in Indonesia, that's a lot. So there's a sustainability aspect of it, which obviously all the OEMs care about. But in terms of, the U.S. market and, having a competitive advantage with cheaper costs, Indonesia is not a free trade agreement, country with the United States. And similar to like lithium in Argentina, there's lobbying going on, and there's still a lot of lobbying going on, with Indonesia. So, will there be premiums, for, let's say, Australia, Canada, US source, sulfide deposits is a question that you've addressed, I think, in some of your publications. And do you think, given how there's just not a lot of nickel around necessarily, outside of Indonesia, will there be some loophole or some adjustments to the IRA to let Indonesia slip in, for that?
Yeah, I think the fact of the matter is that without Indonesia as part of the IRA, then most companies are going to struggle to hit their targets for nickel, and obviously those procurement targets from FTA or some kind of trade agreement countries ramp up over time. So it becomes increasingly difficult to hit your targets if you don't have access to a country that's producing 50, 60, 65% of global supply. I guess that's in simple terms how it is. It's obviously a bit more nuanced than that when you start digging into the details of the IRA. But I think for that reason, and we've spoken to people within the US and within Indonesia as well, there's certainly a lot of discussions ongoing about how Indonesia could be included in the IRA in some manner. They won't necessarily have a full free trade agreement, but we've already seen exceptions for Japan. There's something in the pipeline for the EU as well. So there's ways in which the IRA can be adjusted, and it's still in very early stages, how the policy wording can be adjusted to allow Indonesia in some way. The next big barrier is the level of Chinese investment, and that's obviously something that's core to the IRA, and that will mean that some of the nickel production in Indonesia probably never becomes IRA compliant because of the level of Chinese investment, and that proportion varies. Some have got lower proportions of Chinese investment, but at the moment, all of the nickel production has got some kind of Chinese involvement when it comes to the battery supply chain, and that's not going to change in the short term. There's one project from BASF and Aramet that doesn't involve Chinese funding, but the rest do. So that will be even if Indonesia somehow get part of the kind of the IRA wording, that will be the next barrier, is what's the level in which you're eliminated because of Chinese investment. So that, I guess, that opens up opportunities to other parts of the supply chain. The kind of the most notable FTA countries when it comes to nickel are probably Australia and Canada. Strong mining jurisdictions, strong investment environments, good operating environments, established nickel producers. They likely to benefit from the IRA and the incentives that brings, whether that's a premium or otherwise. I think there's certainly impetus in the junior mining community to kind of make the most of these policy frameworks. And yeah, there's plenty of them. There's plenty of development projects in Australia and Canada for nickel. The difficulty there'll be two things really. It's production cost, of course it always is. In potentially a weaker nickel price environment, you've got to be pretty cost competitive to compete with very, very low cost production coming out of Indonesia. That's one. And the second thing is the process route. There's so many different process routes that get you from a mining project through to some kind of nickel intermediate or finished product. And that will be really important for the battery supply chain. As I said, MHP is the dominant product going into nickel sulfate, and that will remain the case. So if you can get to MHP or something along those lines, then you'll already have an advantage. But not every nickel unit is equal really when it comes to the battery supply chain. So that will also come into the equation alongside cost. But certainly the IRA should help those projects in FTA countries. So if we focus a bit more on kind of the North American market, there's of course incumbent nickel metal producers in that region that in future, if there is a shortage of IRA compliant units, then there may potentially be some kind of IRA premium on offer for those units to be diverted into the battery supply chain. This is all kind of hypothetical at this stage, but there's certainly potential for that to happen, and that would potentially provide even more benefit for any kind of nickel project in the US or Canada.
So Harry, just in terms of the market outlook that you had, I mean, I've run the numbers on battery cell costs and so on. If you're talking $8 or $9 a pound, nickel roughly, and cobalt we've seen come under some pressure. So we combine that with the recycling side of things and what the value is, black mass, NMC versus LFP, etc. If nickel is sub $20,000 a ton and cobalt remains muted, but you've got the recovery values, does that make NMC competitive again against LFP?
Yeah, it's a good point, and there's obviously a lot of levers that affect the relative competitiveness, both on the commercial side but also on the consumer side. We're seeing still a kind of a relatively split market between LFP and NCM going forwards. LFP's obviously been across all the headlines. It's certainly defied all expectations. I feel we'll put our hands up and say that. I don't think any analyst can really say that they probably predicted the rise of LFP as we've seen. But it is still very much a China dominant story. Virtually all of the LFP cathode supply is from China at the moment. There are some projects in other parts of the world, but they're still a little way off. So it will remain a China story for the time being. We've got LFP as kind of an overall share. It's probably going to peak in kind of the mid to high 40%. It's about 44% of the market this year versus NCM, which is kind of 43, 44. So they're pretty neck and neck already. LFP will probably overtake on a global level over the next couple of years before leveling off and in the kind of mid 40s level. And then NCM will continue to rise through the kind of the late decade to kind of towards 50%. So overall NCM will be stronger, and there's various reasons for that. Some of it's due to recycling, as you said, some of it's due to cost, some of it's due to further technology improvements that are in the pipeline, and there's potential there for NCM, whereas they've probably already been taken advantage of for LFP. So there's a variety of things, but there's always this argument which one's going to take over, and we're still very much of the view that there's space in the market for both, but they will serve different purposes.
Yeah, I guess, if my question is along the lines of if the EV platforms become open so that you can be interchangeable as to what you put in the vehicle, some of them at any rate, I'm just wondering if we see subdued nickel prices and cobalt prices coming from acceptable sources, that that NMC could have a pickup, because what you're saying is it doesn't seem to be a supply problem coming for nickel.
No, it's a very good point, because we're certainly expecting weaker pricing for nickel in the short to medium term, and cobalt's obviously had a pretty horrible kind of 12-18 months, and looks like the pain will be sustained. So if you're looking at kind of input costs for the chemical producers and for the precursor and cathode supply chain, then certainly NCM will become more competitive.
Okay, so just to wrap up a little bit, or just a few additional comments, we've seen in lithium, you're seeing like lots of investment from OEMs, offtake agreements. I think you we'll flash up a slide here. You're saying LG, has done making some investments. Ford, we mentioned. Tesla, we mentioned with Talon. GM, made investment, in Queensland. Nickel, actually, that's all on the processing side. And so is actually the Ford deal is on the processing side, not actually getting into mining. Capital intensity, historically was very high, I thought, for these laterites, but you now actually have a chart, that show actually capital intensity is pretty good, for the laterites, and sulfides are expensive. But again, you have to differentiate between high grade sulfide, and low grade sulfide. And like anything, if the price is not just going to rise inexorably, and in fact it's going to be flat to down, this is a commodity, more so than lithium is a specialty chemical. Nickel, it all comes down to capital intensity, operating cost. If you have high grade, if you have good byproducts, those projects will succeed. And that must be behind why groups like Wyloo Metals have taken off market, companies that were public with a long-term view, that you have Australian and Canadian, sulfide. I mean, sulfide projects are very, very, very lucrative. I mean, IGO Limited, which is now in the lithium space, but it's kind of made its name in nickel. Has software margins of 63, 65%. based on their extreme low end of the cost curve. So the more nickel will be needed outside of Indonesia. There are a lot of sulfide projects, but all viewers here, and when you look at the nickel scoreboard for RK Equity, there's not a lot of Indonesian projects. I don't know if there are any. So if you're placing some bets, if you made a bet on Narant, if you made a bet on Mincor, you've done well. If you made a bet on Talon Metals, which is a client of RK Equities and an investment of ours, it had a great run, from the Mine More Nickel days in 2020, but it's almost come full circle. Companies like this and projects like this will be needed. It takes a long time, as we all know, probably 8 to 10 years or longer, to go from exploration and get a project funded and into production. So there's opportunity there, but you got to have a long-term view, be patient. And we really appreciate this update, Harry and Bruna. Again, we spend just a little bit of time on nickel and graphite, the bulk of our time on lithium, but your note was timely. And for those who care about nickel, it is still an essential mineral, for the battery supply chain. I really appreciate the update. So thanks very much for both of your time, and look forward to reconnecting in the future. And all viewers of this channel would encourage you again to get that free article from Benchmark. And if you care about nickel, to continue following all of their nickel commentary.